This is Coca-Cola on the monthly chart, and Coca-Cola has been range bound for the past several years in a tight $10 to $12 price range. So from a technical standpoint, you could say that there are better opportunities out there to put your hard-earned capital to work. However, if you are a support resistance trader, you can play the range. But I want to give you 4 reasons to consider buying Coca-Cola. And this is according to the Motley Fool. So number 1, its dividend pedigree is second to none. Coca-Cola has paid dividend like clockwork for decades and has raised its payment every year for the past 61 years. And it looks like there's no end in sight for these increases. The dividend is about twice as big as it was in 2015 and 4 times what it was 15 years ago. That growth has easily outpaced the inflation during that time. Number 2, the business model is brilliant. You might see Coca-Cola as a beverage company. It's not exactly the bottling company it appears to be, though, but actually a licensor of brand names and flavors, collecting royalties on the products that bottler manufacture and then sell through distribution channels. Number 3, its brands are powerful. It has a wide array of beverage brands in its lineup, including Fresca, Gold Peak Tea, Minute Maid Juice, Dasani Water, and others. While none of them are as big as the Coca-Cola line itself, the company is certainly creating similar success with these other drinks using similar promotional approaches. And then number 4, the stock is relatively cheap right now. Consider adding a stake in Coca-Cola soon because the stock is relatively cheap right now. It's priced at more than 20 times its trailing and projected per share profit, so not every investor will agree with this argument. Stock is persistently priced at such a valuation, and the market's willing to support this premium because veteran investors know they must pay up for quality. While the economy changing now, however, the backdrop is evolving in a way that could favor value over growth again for a while. Don't be surprised to see this particular ticker finally break its dry spell and get moving again in 2024. What they're getting at is that we anticipate the business cycle going into a recession, and we could see money flow from growth stocks to value stocks such as Coca-Cola. All right, so again, this is the monthly chart, and you can see the 13 simple monthly moving average starting to point down and serving as a dynamic resistance. However, on the weekly chart, the most recent leg has been higher as price did bounce off of this resistance support level at $52. And you can see price has stalled, even basing. And which way will it go? Based on the momentum to the upside, you would anticipate more upside price action. However, this could be just a pullback to that monthly dynamic resistance level before price moves down. So not only do you have the monthly 13 simple monthly moving average serving as resistance, you also have the daily 200-day moving average serving as resistance as well. So if one wants to invest in Coca-Cola, you're not investing in them for price appreciation, but for their dividends. Again, the dividends are going to continue to grow over time, and that is how Buffett made his money over the past several decades. So let me know what you think in the comments. Is Coca-Cola worth getting into? Do you think Coca-Cola is going to see another leg higher? Let me know. Thanks for watching. Subscribe. Please like the video.